Welcome to Paragon TV. I'm Randall Paul. We're here with Dave Young. Everyone wants to know what the investment manager's secret trick is. Dave, what's in your black box? You have a portfolio management system that's really quite impressive. Could you tell us a little bit about it?
Sure. And I wouldn't technically call it a black box, but it's entertaining. As far as the way that we manage the money, everything that we do is based on quantitative models. And a long time ago, I made the decision that anything I could do to take the emotion out of the investing process would be a positive thing. Essentially, what we're doing is we're downloading all kinds of data on the market on an ongoing basis. And what that means exactly is we're tracking in our growth portfolio, for example, because we do this different ways for our growth portfolio versus our conservative portfolio. But in our growth portfolio, we're tracking about 200 categories. And those 200 categories includes all of the U.S. sectors, all of the international sectors, emerging markets. I mean, it could be anything like U.S. Biotech stocks to German small cap stocks to Brazilian large cap stocks. It's any asset class anywhere in the world that moves that we can invest in, we're tracking it. And that comes up with about 200 categories.
Let me ask, when you say tracking, do you mean you're tracking the current prices, the trends in the stocks, or are you tracking more fundamental information about them? What do you mean by tracking?
Yeah, we're tracking multiple factors on each one of those 200 categories. So what I mean by that is we're tracking in a simplistic form their 1 month, 3 month, 6 month, 9 month, and 12 month performance.
Okay.
And so we're tracking all of them against each other in those time frames.
I see.
And the different time frames have different weights as far as how much of a factor they are.
Well, I cut you off. Go ahead.
No, you're fine. And then as far as we're looking, another issue that we've found is really valuable is seasonality. So we're looking at the seasonality of those different categories as well. What I mean by that is, like right now, it's December. Usually in November and December, and even some into October, for example, healthcare has a real high seasonality rating. For some reason, during those months, healthcare, 85% of the time, that healthcare sector moves up. And when you look at all the different categories that we track, those categories will have similar characteristics. They've got specific time periods that they outperform. And so that data also goes into our models. And then finally, there's we're looking at where we're at in the market cycle. Are we in a hard downward trending market cycle, like in 2008 when everything fell off a cliff? Are we in a flat market, a sideways market? Are we in a trending up market? Depending on where we're at in the market cycle, each one of those categories will tend to outperform. And so you try and put that together, is determine where we're at in the market cycle, and does this outperform within that market cycle, and that goes into the factor model as well. And so you get all these different factors going in, and it gives you a list, a ranking from number 1 to number 200 of all of those different categories. And this is just part of how Top Flight works, but this is how we select the asset classes that we're going to be invested in. But of those 200 categories, we only want to be in the top 20%. And we don't just go down, and so that puts you in potentially 40 categories. We don't just go down and go, in the top ones. Essentially, we'll work our way down through that top 40, and then we'll build a diversified portfolio from the top 40. So.
And are you doing that on a quarterly basis? How often do you reassess that top 40?
Yeah, that process takes place once a month, and that part of the process, because like I said, there's other pieces of the Top Flight that occur daily or weekly, but that part happens once a month. Usually we run the models around the 22nd to 23rd of the month. We implement those changes on the 24th or 25th, and we do that for a reason, because if you look back to seasonality, within the market, for some reason, between the 25th and the 4th of the month, the market gets a natural pop. And again, it's not guaranteed, it's not always, but it happens a lot more than it doesn't. To the extent that there are investment strategies out there where people only invest between the 25th and the 4th, and they're in cash the rest of the month. And those strategies have done quite well. But that's when we run that model.
Very interesting. That's useful. Thank you very much. We'll see you again. Thank you for joining us. I think the follow-up question on that